Xi Jinping has just failed and failed big. China is now facing an apocalyptic economic crisis of their economy completely collapsing, and this is going to have major consequences for the rest of the globe because we have got new massive news with what's going on with China, with their economy completely imploding, with their exports imploding, with the real estate market imploding, developers imploding, debt markets imploding, absolutely everything is imploding. So everyone, how is this shaping up for a potential economic crisis? Well, that's exactly what we're going to cover in today's video. So let's not waste any time, ladies and gentlemen. Let's get straight into the news, the facts, and the data. Well, the first thing you have to know, China's economic boom that we've been witnessing over the past 3 decades has been a complete fraud. Because look at this. Part of China's economic miracle was a mirage, and a reality check is next. What is that reality check, everyone? Well, that's their imploding real estate market. Look at this. So Country Garden misses bond payments as China's property fears flare. Now, they did make a last minute payment, but they have many more payments due, and this is simply the inevitable. Country Garden, China's biggest developer, is going to go under, and it's going to have domino effects across their whole real estate industry, which we're going to go over later in the video. Because look at this chart here, everyone. Country Garden dollar bonds falls to deeply distressed level, and notes trade less than 10% of their face value. So that's right, their bonds have fallen over 70%. Now, another chart here, we can see developer financing extends drop. The pace of declines in funds received by companies slowed. So we can see here, developers funding has dropped by 33%. Now, that's not all. Look at this. China's largest banks near record low valuation on margin woes. Industrial and Commercial Bank of China at 0.38 times book value, and a lender is expected to report slower earnings growth for their H1 report. Now, the reason for this is because 85% of homes sold in China, which I'll bring up another chart here, is sold before the home is even built. And what's even crazier is in China, people start paying their mortgage even before the home is being built. And this is why we saw the protests and the unrest in China last year in 2022, because a lot of people that were building with Evergrande or Evergrande, however you want to pronounce it, or other developers, they knew their homes weren't going to get built, so they simply boycotted the banks, they boycotted developers, and they stopped paying their mortgages. But we've known about this real estate crash happening over the past 2 years now. This is starting to have huge effects on China's whole economy, and we got some new data just hours ago that shows not only China's real estate market collapsing, but every single part of their economy is facing big issues. Look at this, everyone. China's exports dropped by 8.8% in August as trade slumps persist. And imports have now fallen every month in 2023 from a year ago period. Exports have fallen year on year for every month since April as global demand for Chinese goods wanes. So everyone, Xi Jinping has made a huge mistake. He's made China uninvestable. A lot of foreign investors are pulling out their money, but not just foreign investors. I'm going to go over later in the video how lots of wealthy Chinese are leaving the country in droves. Because look at this, everyone. Global fund / China stock positions to lowest levels since October, and it is just getting worse. Now, you may be thinking, well, okay, their real estate market is in some big trouble where the developers going under. But why is this such a huge problem for China? Well, the reason for that is because China's real estate market makes up 30% of their GDP. This is much bigger than the US, which their real estate market or real estate in the US makes up 17% of GDP, Japan 11%, and even Canada and countries like Australia, etc., that rely heavily on real estate, Canada only makes up 20% of their GDP. So this high reliance on real estate in China's economy makes it much more vulnerable to a broader economic meltdown if their one industry that really holds up their whole economy goes under. Now, another reason why they're so reliant on real estate in China is because a lot of people don't invest in stocks. For example, in China, only 7% of people own stocks. When you compare that with home ownership, 90% of people in China own homes. This is a big difference when you compare that with the US, where up to 53% of people own stocks in the US, but only 65% of people own a home. But guess what? It gets even crazier than that. In China, 20% of people own one home or more because, again, not many people invest in the stock market, so they put all their chips in real estate. Now, this also contributes to the ghost cities like we see, because a lot of people in China, they don't want to rent out these pretty much shell apartments in China, because that makes the valuation on those apartments drop. Also, in part of Chinese culture, they don't want to inherit the previous owner's bad luck, and that's why we see so many empty apartments. Now, I'll bring up another chart here, and we can see the real obvious reason why people are investing in real estate in China is because of speculation. Look at this chart here. We can see from 1998, real estate in China has only gone up and has been their one sure bet to build wealth, because they don't trust the stock market, and there's a lot of regulation with businesses in China, so all of them put all their eggs in real estate. But what does this cause, everyone? Massive bubbles which are doomed to pop, and that is happening right now. Because if you thought that was crazy, look at this next chart. We can see here, look at Beijing. The income to home price ratio in Beijing is 47 times. Shanghai, over 40 times. Hong Kong, over 40 times. When you compare that with New York and San Francisco, that have price to income ratios of about 15. So if you have homes that are worth 40 to 45 times people's income, what could possibly go wrong once people don't think house prices are going to go up anymore? Because again, the only reason why these home prices are so high is because people are speculating that they can flip it in 5 years to the next sucker. Now, also what's very different in China is there's a lot of pressure to own a home because of China's one-child policy, and a lot of those children they wanted, because they could only have one child, they wanted to have a boy. So that means there's a lot more men in China than women. So it's very hard for men to find a wife and to get a partner, and a lot of the wife's family, they will only let their wife marry the man if they own real estate. So this has caused a lot of men to go out there and buy real estate as well. That's just another cultural pressure to own real estate. Now, the next chart I want to show you is rapid urbanization. We can see here, China has experienced rapid urbanization, with the percentage of the population living in urban areas increasing significantly over the years. Look at this. We can see in 1980, it was 19%. Now, 65% of the population lives in the cities, and this has created a building boom. But now that the unemployment crisis is getting worse in China, this is about to reverse. We're going to see people go back to the rural areas. Now, something very unique to China when you compare it to the US or Australia, Canada, Europe, etc., is that people don't actually own the land. They simply just lease it from the government. Now, they can do this for 20, 30, and up to 70 years. Now, again, this just leads to much more speculation that people don't want to hold or invest in these properties long term. A lot of the buildings just simply collapse or get demolished. After 20 years, they simply want to buy it and flip it for a profit over the next 10 to 20 years. But do you know what's a massive, massive problem in China that's opposite to what's happening in the West right now and in the US? They're actually facing deflation because their consumer confidence, their consumers are big savers in China, and we're seeing actually deflation in China, not inflation. So what's happening is businesses are cutting prices, consumers are delaying purchases, and this is leading to a collapse in economic activity with, like I showed you, exports tumbling and imports tumbling as well. Now, if you thought that was the last of China's worries, no, they have another much bigger problem, and that is youth unemployment absolutely skyrocketing. Because I'll bring up another chart here, and we can see here that China has been experiencing a rise in unemployment, particularly among individuals aged 15 to 24. The youth unemployment rate in China has been steadily increasing and is becoming a growing concern for the country's policymakers. So what are these unemployment challenges leading to? Well, the rising unemployment rate poses several challenges. It means that a substantial portion of China's young workforce is unable to secure employment, which can have adverse effects on financial independence, career prospects, and overall well-being. So what exactly is causing this? Well, economic transition. So China's transition from a manufacturing-based economy to one focused on technology, services, and innovation has led to a shift in types of jobs available. And the transition can make it challenging for youth that don't have those specific skills. And another big problem is graduate employment. The large number of college graduates entering the job market each year has contributed to the youth unemployment issue. you. Competition for jobs can be fierce and not all graduates are able to secure positions that match their qualifications. So this leads to big social and economic implications. It leads to frustration among the youth, social unrest, a sense of unfulfilled potential, and a lot of youth are huge consumers in China, so this is going to lead to lower consumption and a more broader economic downturn. Now, if only we had another economy to compare China to that faced a boom like China did and then a sudden collapse. Well, we do, everyone, and that's Japan. Look at this next chart here, everyone. The situation in China has drawn comparisons to the economic bubble experienced by Japan in the late 1980s. We can see here, they saw an absolutely mega economic boom. People were saying China was going to be the next economic superpower. But of course, this boom was unsustainable like what we're seeing in China, and it led to a huge crash from the 1990s all the way to the 2010s and is still only just starting to recover now. And ladies and gentlemen, I think we're about to see the same economic collapse in China because they're coming simply uninvestable and you cannot trust the data coming out of China at all. And if you cannot trust the data, what you have to simply do is follow the money. And guess what? China's millionaires and billionaires are fleeing at record pace. Look at this. So China sees the world's biggest millionaire exodus this year, new study shows. So data showed that a net 10,800 high net worth individuals migrated out of China in 2022 and another 13,500 are expected to leave this year. But want more proof? Look at this, everyone. China's super rich population drops as tech crackdown and global factors hurt wealth. So more than 400 people lost their billionaire status last year, most from China, as the global monetary tightening, COVID disruptions, and Beijing's crackdown on major tech companies hurt the super wealthy. A ranking of the world's wealthiest showed. So everyone, I know that was a lot of information for you. And I know what you're thinking, well, okay, what does this mean in simple terms? Well, what this simply means is China's economic boom hasn't been a sustainable boom and it hasn't been a real boom. There's been a lot of fake building just for the sake of building. There's been a lot of fake investment schemes like electric cars. We've seen fields and fields of electric scooters and cars just simply dumped. And we've seen the biggest real estate bubble in the world in China and is now finally collapsing. Now, on top of this, China is becoming more and more like a dictatorship. Xi has taken a strong hold over all leadership. He's cracked down on everyone. So we're seeing a lot of innovation, a lot of free thinking, a lot of economic freedom. That's gone now, and the rich and the smart are getting out of China as fast as they can. And again, to put it simply, they've ruined their one chance of becoming the #1 global economic superpower. But make no mistake, everyone, this is going to have huge consequences for the global economy, for global trade, investment, and international markets. Because China, the second biggest economy in the world, simply isn't going to go down without a fight. But everyone, what do you think about all this? I think this is the most important story in finance and economic news right now. Let me know your thoughts down below. Now, for my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.